Hey, what's up, guys? I'm here to go over the GU long trade that I took and it helped me pass a 50K challenge. Actually, I still didn't pass yet only because the minimum trading days are not over. I still have to fill it. Long story short, let's look at the structure here. Um, this move down here is from the FOMC, and this is the push that we got after the rate hike, right? And after it came down, after making 400 pip move, I believe it's about 400 pips. Yeah, about 400 pips. The demand zone, the extreme of the demand, it held and actually swept the lows strongly before taking off. So because this low on the left, this demand zone on the left, it got respected. Now we can look to target the highs over here, where I've marked the liquidity points, right? Now let's go to the 15 minute. Um, before Friday, I mean on Friday though, before the market close, I actually took a trade here because my friend, I guess my mentor, SMC mentor in a way, uh, sent me a good setup. So the funny thing is that he didn't take the trade, but I actually ended up taking the trade. But let's go over this little here, trade here. So when the market was coming around to pull back, um, we had this flip zone that was created, and I guess we can call this a supply, right? And this was the supply, and we had a little mitigation, not mitigation, a little interaction with the supply, right? And that's what I have marked here. And as you can see on the 15 minute, we have a little sell to buy. So that is an important point, important area to mark up. And coming down to the 1 minute, if you see how it retraces back, we're creating all these liquidity to be taken away, right? It's being created so that it can be taken away later. And as the SMC concepts have, put it. But so before we hit the POI, what you do is you wait for it patiently and have the whole zone marked up. So the whole zone that, my friend had marked up was here, uh, right? And on the 1 minute, as you can see, this liquidity is being formed, right, to get taken possibly. As you can see, the moves coming down is very corrective as opposed to the impulsive move that made the bullish move up, right? You see this impulse, right? Little impulse here, not little, but a big impulse, right? Retrace, right? Now it's coming back down, and let's see what happens. Comes back down, and what happens is that the flip that I had marked up as the POY, right? It gets swept. And that's a very strong confluence, right? In a way, for taking this trade. So you will see what I mean by a strong confluence. So there are these SMC phantom trading entry models, right? And one of them is one of the models show you that when the POI gets swept, it's a strong confluence. When it takes liquidity, you can enter off of any POI that it leaves behind, and I'll show you what I mean. So it sweeps that, right? And now we are chalking, right? Gotta get the chalks right? That's the most important thing. Oh, I don't have the chalks here. Weird. Okay. So we chalk here, and now we're trying to fly out, and I have this whole area marked out as a POI, but if you narrow it down, we do have the extreme here. So this is the last interaction with this. Well, if you narrow down the supply, let's see. I'm just gonna, I guess delete the chalk here for now, but you can kind of narrow down the supply here, and as you can see, the interaction between the supply and it pulls back, and this is the extreme of it. It pulls back, and this is actually the whole POI that could be used to long when it comes back to tap it, right? Right? But this is the extreme, so we have the extreme marked up. And the reason why this supply is very important is that this is what caused, um, caused the break of structure in a way, right? Well, it's more like a substructure, right? Because coming down here and the whole move is bullish, right? It's substructure, right? And the move towards the bullish side, that's a break of the internal structure, which is the emboss, right? So we're coming back down on the 1 minute here after taking some, I guess, 1 minute swing points. As you can see here, it takes that, it took that, right? Went above it, these 2 points. So we took those, coming back down. And because we swept the liquidity from the POI on the left here, right? What happens? We just react to this to the extreme of it, and then we take off. So anyone could have put in a long position of over here, they could have entered off of the extreme, the 1 minute candle, and put the stop loss right at the low. So my Discord going off and take it up to the high. And that would have been 13, 14 hour trade. But on Friday, after my friend gave out the POI here, I didn't enter off of this POI. I entered off of the chain that was being created. So personally, I got on. So let me create the chain that is being formed, right? And this ended up being a 20R, I believe. It was either here or the bottom one. I could show you the screenshot later, but let's see how far it goes. It was a 20R trade, nonetheless, right? But this takes off. 18 goes a little further. 19, 20R, close enough. Yeah, 20R right there. And that is this is an interesting trade because um, on Eastern time, this is 1 o'clock already on Friday. So market's closing in 4 hours. This is a trade that I'd have never taken unless it looked super good. I know that some of the other guys in the other groups have taken it, right? But personally, I would not be so inclined to take this because of the market closure happening in 4 hours, literally less than 4 hours. But anyway, this is not the trade that got me the 10% on the 50K challenge that helped me pass. This is actually, it actually happens later. So now Sunday, happens. Sunday, the market opens, and now we're coming up to Monday. It's on Monday midnight, actually, right? So this is now Sunday, 9:30 here. We're approaching Monday, right? Morning. And we had these eco lows, as you see here, right? Eco lows pointed out here. And if you look at the 4 hour, if you look at the swing structure and the structure itself, this is possibly the higher low now. Structure is the king, right? Before everything else. So now we might be actually, trying to make a higher high, a higher low, higher high, possibly being created. So yeah, let's go back to 15 minute. We have these equal lows, which is a great confluence to taking an HP higher probability trade, higher probability trade, because you want these liquidity being taken right before the POI gets hit, right? And then running off with a good RRs. It usually happens this way. I can't explain why it happens. It just loves taking liquidity, and when enough liquidity has gotten taken, right? It runs off and usually gives you that really good RRs at the end. So we have this unmitigated 15-minute sell to buy, unmitigated sell to buy candle here, which I have marked up. And this, once again, this is the POI that I was interested in looking for a POI, but then he actually got the POI before me and marked it off. And this is what gave me the motivation, little, I guess, he got my attention. I should say he got my attention so that I was looking for this trade. He was actually sleeping at the time, but I started looking for a trade when the London Open started happening. And let's go to the 1 minute. So now we finally hit the POI, a 15-minute POI, and we already have the chalk points already marked up. But I had this little supply also marked at the same time because this is the last supply before creating the lower low, right? We broke this low, went lower, and this is the supply that caused it directly. So if you're tracking the order flow and trying to long something, this is what you want to do. Track the last point of supply, right? And see what happens. And if the order flow is trying to shift, then you gotta see if it's starting to break the internal structure. But before that, you gotta see if it chalks and how it interacts with the last point of supply. And sometimes even if it chalks, before it starts breaking the internal structures, like the emboss here, it might start failing. So this was a kind of a risky trade in a way, but it had its confluences because on the 15 minute, as you can see, it is bullish. So you should be looking for a bullish, trade as a pro trend trader, right? But now going back to the 1 minute, let's keep up with the order flow. And we do have those. This one barely touches it, so we do have a little sell to buy before getting pushed up and reacting to the extreme of the supply here, right? So this is kind of a flow. We do touch it, but I guess because this POI, so if the POI sweeps liquidity, it's a higher confluence. My friend always, shows me these models, right? So if you have a POI that sweeps something, right? I swept this, right? And this becomes the POI, and it can just take off like that. Sorry for the bad drawing. But if there's a POI that sweeps liquidity, it's a higher probability of that POI being worked out. But in this case, it doesn't sweep anything. So what happens as the SMC trading entry model says, it sweeps POI instead. And now this becomes the first level of respect. As you can see here, it doesn't break and it starts chaining. And as it's chaining, it is just mitigating the candle, before it. And on the 30s, you can see it, clearly, right? You see these candles being mitigated, right? You see this. Let me remark it up. So this is a little sell to buy candle that caused a push and broke this here structure, right? And what happened? It comes back to touch that range. And now we got another sell to buy range here, POI range here, right? Before making a higher high in this small structure, 1 minute structure here, it touches and mitigates it. So what do? I enter off of here. I exactly enter off of 1.3099. That's where I got it on my MetaTrader and put the stop loss right below, right? And let's see how it does. And obviously, we already know how it plays out. Takes the internal structure and takes more liquidity, right? It pretty much takes everything. So it's taking everything here, right? And I took it to 23 RR, right? I closed partial in between just because I wasn't up anything on the challenge. I didn't want it coming back and hitting the, break even. I had times where my trade went like 6R, 9R, 10R, and I don't close any partials. And what happens? I break even. Maybe the entry itself wasn't as good or ideal. You know, maybe I didn't get into the position at a good spot, but I didn't want that. I closed some partials, but what happened was that we got a little CPB that was already marked up. On the less CPB is just a pullback. You know, any supply or demand that can cause a pullback, right? But not anything major like breakup structure on the 15 4-hour, right? And we just take off, and I close out my trade at 23, 24R-ish there, and that was enough for me to make the 10%. And yeah, I still have more minimum trading days to fill up. Unfortunately, they got 10 minimum trading days. I didn't even check. I just assumed it was 5 or no minimum trading days required, but apparently I got, yeah, so I took this on Monday, so I've been just, it's my fourth day now, trading day, so I got 6 more days to go to fill up, but I made 5K on the 50K challenge using using just the 0.4% risk, which is pretty cool. Not bad, right? Everyone wants to pass the challenge using, just using a one trade, right? And that's what I plan on doing, keep on planning doing, but it doesn't always work out. You can take a loss here and there, but as long as your strike rate is above 40%, 30%, I would say that's enough to pass the challenge unless you go on a losing streak. We all have losing streaks, right? But yeah, this one actually went to 66 RR. If you risk 1%, that's 66% gain in pretty much one day. And on a $100,000 live account, that is $66,000 that you'll be making, and you'll be taking 85-90% of it, depending on your prop firm. So there you go. This is the GU.